A much anticipated meeting between Trump and Xi ended with, I'm going to say, little news. I would say it was a positive that Trump and Xi finally met, but the meeting ended in what looks like a trade truce instead of a trade deal. Trump agreed to cut fentanyl tariffs on China to 10%, which brings the overall levy on Chinese imports to 47% from 57%. This also means the 100% tariffs Trump threatened to go into effect on November 1st over rare earths will not occur. The U.S. also agreed to postpone a rule announced on September 29th that blacklisted majority-owned subsidiaries of Chinese companies on an entity list. Beijing said it will work to stop fentanyl coming to the U.S. and buy American-grown soybeans along with other agricultural goods. China also agreed to pause for 1 year the export controls on rare earths that were announced on October 9th, but China's rare earth restrictions announced in early April remain in place. The two countries also agreed to suspend fees for 1 year on ships that dock at each other's ports. A big problem here, according to Trump, the rare earths deal will need to be negotiated every year. I'm concerned by this because there could be a major difference in philosophy with the next administration. Another negative was details were quite light after the meeting, and it wasn't really clear what China agreed to in terms of agriculture and energy purchases and their cooperation on fentanyl tracking. Treasury Secretary Scott Bessent said China will buy 25 million metric tons of soybeans annually over the next 3 years, but all China said was the two sides agreed to expand agricultural trade without providing specifics. Other major points of contention, including TikTok and chip exports from Nvidia, appeared to go unresolved. It looks like moving forward, Trump said he plans to visit China in April, and Xi will come to the U.S., either Palm Beach or Washington, D.C. at a later date. A lot of news there, but as I said, a little bit light on the details. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter. The latest economic news, expert analysis, and market insights.